This is Short Hammer. It is the 16th of May, 2021, and this is Trading Zones. Now, we're taking a peek at the 4 hour on the MNNQ, and there's been just so much movement. Um, and to be honest, what I ended up having to do on my MNNQ trades, because just how volatile everything was. Now, everyone's different, has different time frames that they use. Like I have a buddy whose average trade time is, well over an hour, maybe even an hour and a half of how long he remains in a trade, right? As far as his futures trades for him to find green. I have another buddy whose average trade time is about 2 minutes, right? But the funny thing is, at the end of the day, they're roughly making about the same amount, right? A couple thousand here, a couple thousand there. So it's funny that different time horizons can give you, a similar return on investment. But the main thing is each one of them, this is sort of the takeaway, each one of them found something that works for them, right? Because if you have anxiety about spending too much time in a trade, and you don't like that, you don't like to sort of be stuck in something for too long, then or maybe you just that's just the time that you have, so you have alerts and triggers and you just get within those 2 minutes. If you're trading the NQ, right, you get that big movement, you get 10 points. That's all you really, you have, let's say 10, 15, 20 contracts, you get 10 points. That's not bad. And on the MNQ, you may have 30 contracts, 50 contracts, 60 contracts. And you may ask, why would someone trade? Because it doesn't return the same per movement, per dollar movement as the NQ. And the answer is very simple. Some people prefer multiple averages. For example, um, let's say you like the MNQ and you like a level. You might get in 10 contracts, right? And then it goes lower, you grab another 10 contracts. A little bit lower, you grab another 10 contracts. Some people trade that way, some people don't. But what this allows you to do is that, depending upon your personal preference, if you've done that with the NQ, you're down a whole bunch per dollar. And, you know, you get punished a little bit harsher for being wrong if you like to trade multiple contracts, if you like to average, if you like to scale out, right? And so for some people, seeing, 3,000, 4,000 red on the screen bothers them. Like me, I don't like to see that, right? But for me, seeing 100, 200, 300 on the screen, and then averaging, and then on the pushes, scaling out, scaling back in, scaling out, scaling back in, I for me, that makes me feel, as far as my comfort level when I trade, I like that better. I feel as if I can, manage that better, and I'm comfortable. For example, that has happened. I've gotten busy, whether I leave the screen for whatever reason, and my stop doesn't trigger or whatever. I come back and I'm not down $10,000, right? If my software crashes, I'm not down. If it pauses, if it freezes, if there's a glitch, you don't blink. I had a buddy that lost about 15 to 16,000 the other day just because his computer froze. Pissed off, right? He just comes back, he's down 60, 15, $16,000 because his computer froze. If he had been in the queues, he might have been down 1,000, maybe 900. You can grab that right back without really having to do too much as far as changing your strategy. But everyone has a comfort zone. So the entire point is, find your comfort zone, find what works for you. It doesn't matter what anyone else is talking about. Find what works for you. If you're trading futures, if you're trading equities, if you're trading options, and whatever that comfort zone is, that's where you stay and you perfect your craft in that area. You just perfect it, and perfect your process, perfect your entries, perfect your exits, perfect the execution. Okay, off the soapbox. So, MNQs. Um, we had a great week, and if we want to really dive into this, right? We we see this dip push back up, this dip, right? We're down here. And for me, I had to actually switch, and I'm gonna really get into this really quickly, guys. It's gonna be fast. Let me get into it. I switched, and I actually switched my chart. Well, let me do this first. So, if you remember the last chart that we did, or the last video that we did, you saw these little dashes, right? And if you carry these over to here, let me extend. You'll see what I mean. Let's extend this out all the way across coordinates. Push this about 400. Look at that. Isn't that funny? And that's where you have these levels where you've seen things in the past, where you've taken trades in the past, and you have these trends and these areas that you're like, oh, this is an area of contention. This would be interesting. That's where we reverse, right? And so if you're following this and you're watching these levels, right? So let me move this. This is remove. Okay. Okay. All right. So this, when we double bottom, this showed this area as a very strong area, right? So when we came down and we cut through this area like this, that's a sign the buyers have stepped out of the way. The chances of us going lower is pretty high, right? And if you I'll come back to that. So when this went down through the 13266 and you saw this sort of back testing this area, then we had a flare down, then we came back up, then a lower low, that wave, and then this that brought us back to the 13388 area. What you want to see here is the initial test. You expect a rejection, right? And that's usually how I play it. My first test of a supply demand area. I'll play it on a lower time frame, and my expectation is that there will be a retracement. And usually I'm in, and I'll have like a 10-point stop on that. So I'll wait for the pierce or the push with the touch or the feather, and I'll look on the lower time frame, like the 1 minute, and I'll look to see if there's any reaction. And if there's a reaction, I'll get a trigger off like a higher low candle, and then I can jump in when I watch my oscillators and I'm watching volume, see if we get an increase there, and I'll jump in and try to ride that bad boy back up. But my stop is that previous low swing, right? And if it goes back through there, it usually be like 10 points, like a 10-point stop. So if it goes back through there, I'm stopped out, and I'll wait for my next setup as far as the candle structure, the volume, and my oscillators and my levels to get back in. So what we're watching for next week is, do we hold above the 13388, and do we get volume and strength that pushes us to the 13563? I'm still not convinced that the selling is over. The volatility is still too high in the market, so I'm not convinced, right? And we haven't really had anything change, any questions answered, even from the microchip side, right? With the microchips that they're trying to, Congress, I believe, is trying to pass the bill to extend funding, right, to be able to get more microchips produced. Why? Because we have a shortage. That's why the car market is, if you buy a used car, I have a lot of buddies that sell used cars. The prices are insane right now, and they're inflated because there's a lack of supply, because a lot of new cars aren't able to be put into the system to be sold because they don't have their microchips. So it's a lot of pressure in that market right now. So just, if you think about it, there's so many things that are pushing and pulling on the economy. And yes, it does. One of the things that will release pressure is that the CDC just said that you don't have to wear a mask if you're fully vaccinated. So that is going to, that they did that right before the summer. We know exactly, they're trying to restart the economy and sort of scale back, I guess, the government intervention. And we'll see how that works. If people are confident and they start to go back to Disney and start to take their flights and vacations again, start to go to restaurants again. That's what the economy needs, right? Whether you agree or don't agree with the decision, the economy does need people back out, spending those dollars at restaurants, going into restaurants, going into grocery stores. For those that have not been going into grocery stores, spending time in grocery stores, not just going in, but spending time. The way that they set up the shelving, I mean the shelves and the displays, to be able to, they want you to walk through Costco for 2-3 hours. They want you to buy more. Like, the economy needs those things. Neither here nor there. And also restaurant workers, right? Our servers, our dishwashers, our and I've been one in the past, right? I've been a everything except for a server, because I used to drop dishes all the time. But the just all these things the economy needs, our airline personnel, like just all, and the supporter, the supporting jobs around that, right? It's so much that this economy needs, and we'll see the the government intervention has sort of softened the blow of what a lot of people are going through on a daily basis, as far as with their finances. Like, for some people, depending on the type of job that you have, the pandemic financially has not really impacted them. But for other people, it's been devastating. So there's just a lot that will shake out. We'll see how that plays out over the next few years. But everything will come to a head. We'll see how things work over the next 2 years. But it's just been a tale of two Americas when it comes to the pandemic, from a financial standpoint. Okay, so let's keep it moving. So what we want to see is, if you're bullish, hold this 13,388, bullish above, squeezing the 13,563, and you want us to run back through this wave here, right? This 13,815. That's what you want us to see. That's what you want to see on the cues, right? See these bottoms here? You want to run back through here, and let's go. That's what you want to see. What you may see, though, even though we have a higher high wave compared to this wave, what you may see is another pullback, right? It's still volatile. So be careful. If you're in, don't go full size. Take your time, scale down, unless you're certain, right? Unless you're certain. So you got to be careful of this yes, we're going up. Don't be fearful. Just be careful. See which way we go and watch these levels, right? And if you go, let me show you what I'm not going to get into that lower time frame. I'm just going to keep it moving but watch these levels. So to the upside, you see the 13,563, 13,688. We want the 13,388 to hold. Below that, we have 13,266. And below that, 13,118, 13,089. And this level here is 12,962.50, right? So we'll see if this continues. You just got to play the movements and the triggers, and see which direction we go here. MES. Okay. All righty. So if you look at just looking at candle structure, we see that we broke below this area here. We tried to catch a hitch at that low, and it didn't. It gave us a pullback and a back test into the 4074.25 area, but we didn't hold, and we came down and we sold below and hit that little pocket there. So this buy back up, beautiful. They're just telling you that there is no doubt what we're doing here. And then the next leg up through here. It's just been insane, right? So what we're going to watch for, if you're watching the MES, is, do we crack the 4200s? And can we squeeze and pop the all-time highs and go back to the 4230s? We want some 4240s in our lives, right? If you're bullish, that's what you want. If you're bearish, you don't mind this running back up to the 4203 area but you don't want this to get above the 42.10. You want this to go back down. And you wouldn't be shorting the back test of this and these pushes up through these areas. Like you would, let me see something if this will show. It's better. I like the Q better on the Qs, but we'll see. If you look at this back test, you see no bullish above, no bullish continuation on the hour. Goes right back down, right? On this one, candle over candle, you see that if you played any one of these higher high candles, you'd put your stop here, right? That's where your stop would be. If you play this higher high, no matter where you get in on this candle, the second that you play that the candle's higher, it closes, your stop is down here. And then you'd ride this all the way up. But what you would be doing is, for me personally, I'll be moving my stop, right? Once we get this, the next candle is a higher high, and we're going, my stop now is up here, right? And then once this next candle takes off, I'm moving this stop. Once that candle closes, my stop is now going to move up. I'm going to move that bad boy up. So now I'm creeping. I'm like, okay, cool. I like how this is moving. So you can keep it below this candle if you want to. Me, I'm up in here. I'm following this thing on the lower time frame. And the next candle gives you a higher high. Okay. Now I'm like, okay, cool. Now that we've done this, we're approaching this area here. My stop is going to be up here, or it will be here, profit target, I'm out. So it's different ways. Some people are trailing, some people are spot traders, right? So you trail, and other people go spot to spot and they're out. What you don't want to do is sort of what's the word? Paralysis by analysis, and get greedy, and you want it to go here. But on these pullbacks, when you see the red, you get stopped out. Like you just close it out because you think it's going to sell forever, right? So find a strategy, whichever strategy, and just stick to that. Whatever it is, process over results. And what that means is you may have a good result once or twice. That's not a process. A process is when you have a system and you can adjust that system and tweak that system, but you know that it works. And sometimes the system may have a down month or a down week or a down 2 weeks because the market can fluctuate. So what you usually want to have is one system for one type of market and a different system for a different type of market. Some markets are dip buy markets. Some markets are sell the pop markets. Some markets is just so volatile that, you may have to change. Like for example, me, I have to make some adjustments and change the way that I do my bracket trading, right? Because I was doing bracket trading. It was going really smooth. Then I had a couple of red days and I'm like, wow, because I, set it and forget it and I'm off doing something else. And I'm like, wow, I, kept getting stopped out. Let me make some adjustments. Let me be a little bit more hands-on because of the volatility in this market. Just leaving and walking away is not, or just setting in your levels and leaving is not something that that's working right now. So let me make an adjustment. So you'll have different tools for the job, right? And each tool is like a separate system or process. And like, okay, in this type of market, this is the process. In this other type of market, this is the process. It's almost like being able to call an audible, like you're a quarterback and playing football. You can call multiple audibles. Oh, they've packed the box. Okay, cool. We're gonna do a hot route. Okay, they're playing off. Two safeties high. Okay, cool. Switch to a run play. So you have to have different systems, different tools in your tool bag. And sometimes if you don't feel as if you can get the flow of the market, there's nothing wrong. Like I had some buddies the last week and a half, they sat out. They only go long. So they're waiting for their triggers and their levels, and they're not playing any of this volatility. They're gone golfing. They could care less what the market's doing. They're like, they get out and they just say they'll wait. And once the market calms down, they'll get back in because that's their strategy and that's their comfort zone, and they're trend directional traders. And they only play the upside. They don't short, and they're not fading. They only play the upside. So once the trend is developed for them and they feel that it's going up and there's gonna be range in it, they come in, and if it's going their way, they'll get in big and heavy, and they'll scale out as it goes. If they're wrong and it goes back against them, they get out and they go back golfing. They are not playing. So just sharing that to say there are different ways to win. Don't let someone else's way of winning and way of succeeding in the market make you feel that your way is inadequate. Just find what works for you and perfect that thing. MES 4168, next level 4203. I'll pop these lines in up here around the 4230s. We get those levels here. This area here, these upper wicks around this 4210-ish area might turn into something we have to see. But I'll definitely draw those lines in, and I'll probably pop some things over on StockTwits, which I haven't really used much, but I'll pop some charts over there. But we'll see. Right now we're looking super bullish, right? Look at this run, but we'll see if the market holds that up and if we continue. So what you would watch for is hold of structure and continuation. So we'll see if this 4168 or 4160s holds, or if we retrace to the 4140s. We'll see how that works out headed into this upcoming week. RTY. Yep, we're trying to go. So watch your levels. Watch 2230s. 2234 is here. Then 2247s. Below that, 2211, 2199, 2172, 2153. Nice drop here. And so me personally, I'm not trading the Russ at all. So if you are trading the Russ, what you want to watch for is what happens around the 2230s. If we reject, if we get above that, do we make it into the 2240s, right? 2234, do we make the 2247-ish, that area? If we reject, do we retrace to the 2211s, right? And that will be the area that you look to see if the buyers step in. If we fade below, then watch the 2199s. Like for me, I'm just saying first touch. Like first touch is what I'd watch for, and a reduction in volatility, a reduction in volume. That's what I'll be watching as you approach these supply demand zones or heavy inflection points. It's watching to see if the market is showing that there is a change coming. There is a potential for a reversal, and whatever you use to find those triggers, like that's what you want to watch for around these supply demand areas. That's how you use it. Over into Amazon. So Amazon being Amazon. And you guys remember we talked about the 3220s, right? And where do we go? Right into the 3220s, right? But check this out. This 1 hour, this bad boy. I'm gonna be quick. I know this is turning into a longer than expected. Okay. I go even lower on this, but okay. So we're down into the 3220s, right? Okay. So let me go lower, see if this will show me what I'm looking for. Okay. Okay. 3224. 3204, I mean, and pull back here. 3231s. That's too heavy. I'll stick with the high ones. I'm not gonna be able to do it fast enough what I want to do. It's gonna take too long. But we said watch to see if we would retrace the 3220s. We did, right? We dipped below that. 3190s was the area to watch next. We touched that area. We dipped. We had a flare back test at 3220s. Then we had a gap down, right? But some of these things are happening at times where we can't, aftermarket, pre-market some of these movements, right? But the 3140s, there's no bearish continuation below that. And that's what these areas are for. It's for you to watch to see, do you get bearish continuation below some of these levels or bullish continuation above some of these levels? So no matter what we did, we didn't see bearish continuation below the 3140s. Now we're back through the 3220 area right above it, but still in 3220s. What we want to watch for is see this last pullback, this candle here, the high of this candle is right around 32.38. So what we want is we want the buyers to get us above that. If actually a gap above that would be great. And the squeeze to the 32.60s would be nice if you're bullish. And then you want to see what happens there if we get above that, if we squeeze, or if we sell back, if we sell or pull back down to the 32.20s, or if we fall back within this channel. If you're bullish, you don't want to spend any time inside this channel, right? These few days inside the channels, that was too much. You want us to be back above here, and you want separation. If you're bearish, you want us to continue down into this channel, crack the bottom, back test anywhere inside of here or anywhere along the bottom, 3080s, and you want us to sell. That's what you want. You want us back near the 2950s. And so we'll see where the strength is in this market. I have no idea why Amazon would be selling. I don't think Amazon is losing market share, or people are no longer shopping at Whole Foods, or people are no longer using Amazon Web Services. So one of the things that, and I'll get into this at the end of the video. So this is interesting. So watch your next levels. You have those areas here: 3220, 3193, 3142, 3085, 3068, 3020, above 3268. Let's not do that. 3344. So watch these levels, and you'll be able to see what we do at those levels, how we react, and what the market's telling you when you get there. Netflix being Netflix, and we see we had a roll, and we stopped above the 475. If we go back, once you get below the 4 or around this 470-ish area, historically, we haven't gone too much further, and we've reversed, right? So down in this area, look at this, right? Just like up in this area around the 550s, we're going back down. So if you wanted to say that, and just taking a shot, right? You don't have to risk much. You could do a vertical if you want to. You could do one contract, one option. You could do, 20 shares or 10, whatever you want to do. But once you get down to the 470s, that this area here, this is down through the 460s. We've had reversals. Like they've bought it back up. Could this area be seen as a little bit too early? Yes, it could be seen as a little bit too early. But if you can take the risk, it's not a bad area to look at to find a potential long position, right? Excuse me. And this all depends upon your risk and what you can take. But we'll see what happens next week. But we do need to find bullish continuation or bullish action above this 493 area. If we look back at the last few drawdowns or dips, this 490 area, look here, through the 493, right? Down here, 490, we didn't break the 485, back up. Down back through this area again, look at this area here, bought back up. And this buyback up, right, isn't just like, oh, that's 2 points. No. This up in here is 10 points, 10-point bounces. This one down here, look how far this goes. I think this was earnings. Down here again, 490s. What are we doing? Going back up, right? Pierce of this, right back up, almost like a rubber band. We went lower this time, but they bought us right back up. So we'll see what happens here around the 493 area. If we get bullish above and we squeeze back through these 504, 507s, these 5 teens and go higher. Or if this just turns around and this area that has been rather supportive all of a sudden becomes a supply zone and we sell. So we have to see what next week looks like, because this could sell clearly and go down here into the 460s. But that's been an area historically over the last, last few quarters that we've seen the buyers step in. And so we'll have to see if that continues, right? If we happen to go down. If we happen to go up, then we want to watch to see if we break above the lower 500s. And if we can get a squeeze through the 504, 507s, then up through the 514s or five teens, lower five teens area, and we can get a run. I look at this drawdown as one of two things. The market's been insanely hot, and a lot of the people that are long, they're probably waiting for levels or triggers, and they're more fundamental before they really start to get in and size up. So if you really want to be safe, just wait for the money flow to really heavily start going, back into some of these blue chippers. Just wait. The big funds will stay. You will know when they're in. You will know when the floor is in. You will know. So you can wait and see, wait for the market to stop being so volatile and wait for it to be trending in a direction and then just follow that trend. Or you can brave the whitewater rapids and get jump in there and see if you can kayak over a waterfall and figure out, where the rocks are. It's a choice. Many different ways to trade this market. It's just a choice of where you feel comfortable putting your money. NVIDIA. So we're right above the 555s. What you'd like to see is a push into the 589s. If that doesn't happen, if we go back through the 555s, keep your eye open for the 531s. We do have a line here at the 546, another line at the 536 area. It looks like the buyers did step in that zone. We didn't really get bearish continuation there. And these are some old lines that we have. I'll extend them a little bit just so that, where are we? Let's see here. Let me put that at 350, see if that gets us across there. And okay. All right. And extend this one the same way. Let's say 340. And that's fine. All right. So we did reverse in this area and we're headed back up. So on any drawdowns, again, you want to see if this area holds. If it breaks, watch out for the 531s, which is not too far below, then the 514.80s. That's on NVIDIA. NVIDIA should definitely have a reaction with all this, all the news and things that are coming out about microchips. And I didn't dig into it. And if you're fundamental, you should. To figure out if they're one of the companies that could receive this money from the government and this push for creating and building more microchips. So we have to. That's something. If you're a medium term to longer term trader, and you could define that however you want. If your time horizons are a little bit longer than the intraday, right? You may want to take a look at some of these chip companies. Because the amount of pressure that are on other markets because of the lack of chips, there could definitely be a nice trade there. So whether it's Intel, it's NVIDIA, it's why am I forgetting all these chip companies now? But just search out chip companies and take a peek to see if you if you'd like to put some money into it. It's not trading advice in any capacity. Just saying, take a look at it. Might be interesting. Just a little interesting. Microsoft. So Microsoft, nice reversal. We're testing the 249.46 area we see here. Want to be bullish above this. And then we make a discrete into the 251.90s. Nice. And you can see the little back test here, just right at this area. This 247 area. It's cool. Right there, then back down. Then the reversals here. That makes sense. You can see all the way across. Though the 220s, the upper 220s are a better area that I like. I think though that area is really strong as far as the demand pocket. So we'll see if we continue up on Microsoft. Um, but to the upside, 249.46. Above that, 251.98. To the downside, watch 244.77, 242.62, 240.82. We'll see. We'll see if this buying is real, right? We'll see what next week shows us, right? If next week we're going, and it's one of those weeks where the market has regained some stability and volatility goes down, then it may be safe to come out and play. As far as for those that aren't interested in trading the volatility and may have a a little bit longer time horizon and are more trend traders. So we'll see how this works out. But right now, we just want to see if we're bullish above 249. And if we are, do we get a squeeze into the 251.90s area? So we'll see how that plays out. That's on Microsoft. Next up, we have the apple of our eye. So Apple reversal off the 121.90s. Nice. And through the 124.70s. So you see it's gaining these levels. Now we're through the 127.40s or just the 127s. And we want to see if we're bullish in continuation to the 131s. With stores opening up, there should definitely be more people at the Genius Bar. I think that's what they call it. And more people going into Apple stores. That would mean that they should be moving more products. There should be more services being done, the more ability or more potential for upsells and upgrades with people going into the stores and being sold. And so we will see if that is the case as the mask mandates are relaxed, as more people are sort of interacting and getting out back into the economy. All these types of companies, even though they have a strong online presence, but all these types of companies should definitely see an upswing in commerce just from the economy truly opening back up. So we'll see. But we have to remember that even though in the US things are opening up, in other countries, remember this is a global pandemic. In other countries, that's not the case. Some countries it's getting worse by the day. So you have to kind of look at the places where some of these companies do business and sort of see what they're going through there and what percentage of Apple's customer base lives in these different areas that may be going through a rough time as far as the pandemic, and stores may be closed and people can't go out and get things done, can't go into the stores where those places may be, right? Because Apple has a lot of clients in the United States or a lot of customers in the United States, but it's a global company. So we have to see how supply chains and consumers globally may be impacted by the pandemic, even as the U.S. is opening up. Facebook, and we're off to the races. Nice movement here on Facebook. We did hold, if you look at this area down here from April, late April, the 297 was an area. We got close to that. We held, and you can see here, look at the breakout. Haven't yet to break back underneath that. That's interesting. So watch the 297s. That's something to note. Watch the 297s, right? Down to this hitch around the 294s. If that breaks at some point, and I'll set an alert this later, but if that breaks at some point, that may be a trade to the downside. Just because you see that this is a buying pocket, right? Look at this pocket here. Previous high, back test, pocket held, back test, pocket held, approached it, pocket held, going back up, right? 2 different days, multiple times, that pocket held around the 297s. So what we want to see is, do we get a push into the 321s, and are we back off to test the all-time high? That's interesting here. So we got to watch for that. Let's see what happens. But this looks strong. So we want to watch the 321s and the 330s. If we hold the 313s, watch for that squeeze. If we go back to the 313s, do we hold this first hitch at the 310, or do we go back to the 307.90s and below that 303.90s? And if we do sell at some point, watch the 297s to see if the buyers have left the building. Okay. And if it flares down through here because of some sort of bad news, just watch this level as an inflection point. You know how this 279 was our swing door, and above we're more bullish and below we're more bearish. I'm going to keep an eye on this 297 over the next few weeks and maybe even months, and see what happens each time we interact with that level. That's a level you may want to mark on your charts. And no, actually, no. I know exactly where I want to go before I go to check out CMG. I want to go to Intel. Look at this on Intel. So remember, we're talking about chips. Intel's a chip company. We held the 53, 58 levels. Look at that bottom in action here. Now we're pushing up into the 55s. So you want to get back into this channel. And if we get back into this channel, you want to see a rise. And let's see if we go through these different levels, the 5690s, 5880s, and 6094s. I would recommend keeping an eye on Intel and looking for triggers to the upside. Strong company, right? Strong company. Keep an eye on Intel. If you don't have these levels on your charts, you may want to add them just as an assist, right? The 5350s, the 5570s, the 5690s, the 5880s, the 6090s, these areas, just to see if we see reactions. And if you watch the drops, and for those of you that been watching these videos, you've seen these levels. Look at these pushback ups. Every time we get to these lines, right? There's a reaction. Every time we get to these lines, there's a reaction. There's a reaction. That's how you validate levels. What does the market do when it gets there? And first touch doesn't always have to react, but you watch the waves, and do the waves go back through that area or hold to that area to show you that, at least if not that exact line, that area is an area of interest in the market. So you have these levels. Keep an eye on Intel. Now, let me jet through these other ones. CMG. Just look at this. Wowzers, right? So what we want to see is, do we hold the 1340s? And just this selling, you got to be careful. CMG is a very strong company. But I would actually dig in to find out why it's selling. And I'll have to take a peek at McDonald's after this, but we have to see why this is selling. If there's any other news or any other supply chain issues. And if not, I would look for an area for this to settle and for the trend to change, because CMG is a strong company that usually does really well on earnings, right? So 1348, above that 1394. This is the 1421 area. Up here is the 1468s, which is the level that we like. A break of that area and a drop down here and no buy is a sign of selling, right? Because this 1468 has been really strong for us. And you definitely want this area to hold, but we sold through all that. So this is actually really interesting. We want to see if we don't get back above the 1420s, is this really going to sell? So this is actually really interesting. I'm going to keep an eye on CMG. CMG is an interesting company because of how volatile it is and how rangy it is. It's one of those things that if you're directionally right, and I usually don't recommend this, but trading out of the money can work on CMG if you're directionally right. If you're directionally wrong, then that thing is dead. Oh man, it is a dead stick. So you have to be careful. McDonald's saw a little dip down. 220s held. Look at this candle structure held there. push back to the 230s. What you want to see is if we're going to regain the 235s. And because McDonald's is so one of those funny stocks, wait for the pattern to develop. And once you find the pattern, just trade the edges, right? Just trade the edges. Because if it's going to channel here between the 226s and the 235s, and create a zone for you, but you wait for that. Or you can trade, off these levels, but I'd wait for the zone and just play the zone and see if when we push back into the 230s, do we see weakness? Does it come back down? That might be interesting to watch on McDonald's. Um, as things open back up, you do expect people, and I know McDonald's is going to always make money, right? But you expect people to go to more restaurants and spend their money at more restaurants where you can go in and have a seat. So definitely keep an eye out on a shift in consumer dollars being spent to restaurants that were weak when the pandemic was high, and you know deliveries, Uber Eats, and things of that nature were the way that food was delivered to consumers, or strong takeout. And there's certain foods like sushi restaurants that's not their strong. That's not where they're strong, right? And so whatever dine in restaurants that you could think of, they may benefit from things opening back up. Maybe even a Fuddruckers, like a Play, they'll benefit from things opening back up, people going back inside. So I would look at a lot of the pandemic companies, the companies that struggled during the pandemic, that need consumers to come inside and need consumers to, like Disney, those types of places that need consumers to be there. Um, and Disney is global, so I think Disney in Shanghai has been open, but just Disney in the U.S., these places where people have not been going, that we're entering the season of vacation, um, and the season of leisure in the summertime, and kids are out of school, and families are going out to eat more. Keep an eye on some of these places and some of these things. Six Flags, like just keep an eye out to see, um, just to see if things change around some of the tickers that are associated with those industries. And also, airlines. Some people should be traveling, but we'll see. We'll see. I'm not going too much in too many other areas. Gotta go take a peek at Tesla. I'm pretty much going to wrap this up. So Tesla hit the Sophie levels, and that's anything in these 500s. Sophie's looking for a dip buy, and actually just talked to her. She's not going too heavy, but she's definitely having a ball. Um, but these are the levels that you watch for the triggers, right? Now, is this a guarantee that this is going to do what this did and we're going to go back up here? Not at all, right? But what you do is you do look for waves and patterns, and you look for cues as far as volume. And if you use something like Black Box and you can see options flow, look for an increase in options flow. So you never take one thing and say that that one thing is the be all end all, in my opinion, right? What you do is you look for clues, like you're a detective. So when you're trading, to me, you're a detective, you're an investigator. You need to find clues to support your case. So the more clues that you have, the stronger case you can build, the stronger body of evidence, the less chance your perpetrator, quote unquote, has of getting away, right? So the more points you have and evidence that you have of your theory or thesis, the stronger the possibility that it may work out in your favor, because you're not just looking at one thing to say, hey, oh, the volatility is gone, I'm gonna get long. There whatever the one thing is, usually a table or a chair stands better with four legs, not one. And if you're working a circus, you can ride a unicycle. My apologies, no insult. But usually you want, two wheels, three wheels. It gives you a greater chance of success. So watching Tesla down here, I'm not saying every time it gets into the 500s to get long, but whatever triggers that you use in your process to get long, whatever those stocks are, if they fired in this area, then you may want to look for a position. This thing could be down here Monday morning. I mean, you don't. It's one of those types of markets. It could also be up here Monday morning. We'll see, right? But for some people, when it gets down here, they're looking for long positions, and any sign of a reversal, they're long. So watch Tesla. It held the 562s, and we have 568, 579, 585. Up here, we have the 616s, 651s, and 713s. You really wanted to get through the 616s and be bullish above to give us extension in the 651s. For me personally, I'm watching the 616s. I want bullish extension in the 616s and strength above the 616s that will give me the opportunity to trade the 650s, right? That's what I'm waiting for. So for me, I'm not long yet. I'm not playing yet. This is not trading advice, but for me, I'm waiting for that. Above the 616s, I'm looking for some bullish action on this bad boy, and I'm looking for the 650s. And what does that mean? That means that when it gets above here, I'll be looking for a sign that this is holding, and I'll be looking to jump in on the next wave and a push up. I'm scaling out, and I may hold one into the 650, right? May hold one into that area, but we'll see how that plays out on Tesla. Let me take a brief peek. Oh, Disney. So these are our Disney levels. Yes, was playing that. So held the 168s. That's nice. We want to see if we get through the 175s. Not out of the woods yet. We have to see how this works out. Because it may end up going back to the 168s. But for me, I'll watch right now. This is a good trade on the week. But what I'll watch for now is if we break below the 168s, want to see what happens. There are definitely a few areas in here that you may want to watch for little pops, little demand pockets. But these are your lines and your levels. 161.45. Make sure you get all of them. 152.30, 161.45, 168.97, 175.98, 180.87, 184.15, and 191.50. Are there some higher lines in here? Yep. I didn't draw those bad boys in, but I'll pop those in at a later date. But these are the levels that you're watching. I have my alert set for some retracements at certain levels, and at those levels, I get interested. Outside of those levels, I'm not interested unless I'm using pivots. And Disney is not one of those things that I was uber interested in. But right now, with the news of the mask mandate being taken away, as far as if you're fully vaccinated, this could be really interesting. So we'll see how this plays out. No trading advice or anything on this, just giving you some levels on Disney. Go to JPM. Going nuts as usual. This is lately, and all credit for this to Michael, because I am usually not a person that'll play JPM, but I mentioned it to a friend of mine, and she plays it religiously. She loves JPM, and she's been long all this. Like, I'm Mr. In and Out, but she's been long all this. And so we'll see if this continues. We're above the 161s. The 156s, 154s, 149s, those are areas to watch on retrace. I'll pop some lines in for this and probably pop this up over on StockTwits. But off to the races on JPM. Look at Goldman Sachs. Same thing. Look at that. Just off to the races. And what you want to remember, right? And I'll pop some levels in. The top here is this flare is 376. What you want to remember is people were thinking that the previous run in the market, that bull run that we were on, was because of tech. It wasn't. Tech is, the sexy industry, the sexy sector that everybody likes to talk about. But that run was based on financials. So look back, do your research.
But that run that the market's been on, before we've had these dips, were the financials. The financials were what put the market on its back and put us through all these all-time highs. It was the financials. So if the financials are bidding up, keep an eye on that. Yes, tech and everything else, that's important too. But the financials have been the backbone to the market, in my opinion. Um, we'll see if that continues, because the market is funny, right? The market will disconnect correlation whenever it chooses to. So just keep your eye out on the watch the TOT. Just to keep an eye on the bonds, keep an eye on gold, watch the levels, watch the financials, watch tech, and just see if this breaks the highs here, and if we continue. My personal opinion is that I don't think the banks are truly this valuable, but value is purely subjective. So it doesn't. Some people don't think Bitcoin is valuable. Other people, they've bought an island with their Bitcoin. So it just, value can be subjective, right? But say men lie, women lie, but numbers don't. This isn't lying. Watch the market. Right now, what the market is saying is Goldman Sachs is worth $369.80 a share. Whatever I think, or my theory or my thesis about why that could be, doesn't matter. What matters is, if I want to buy Goldman Sachs, I have to pay more than $367, so $369. If I want to sell Goldman Sachs, it's at $369. Everything else doesn't really matter. On my theories and theses, it doesn't matter. What matters is that the market feels that there's value here. And we'll have to see if the market feels there's more value to the upside here. That'll be interesting. And looking at the SPY, nice bounce here around the 403s, 407s, 409s, going up, 412s, 413s, 416s. We'll push the 417, 27s. I want to see if we pop this and go back through the top of the 420s. So very interesting setup on the SPY. Keep an eye out. Look at this area here around the 418.20s. We went sideways there for a while. Usually when you get this amount of volatility in the market, don't be surprised if we get a cool down period where we're kind of range bound. So that's possible also. So keep an eye out for that. Don't expect the volatility to continue. Check out the VIX, and just keep an eye on the volatility to see how things may change. Like, we're all over the place right now, but at any point, we could sort of go sideways for a little bit and consolidate. So we have to see. Just keep your eye on the market. Another thing I want to say before I hop off, with the dip in so many different stocks, right? This is really a good time. I know I always talk about technicals, but this is a really good time to get into the fundamentals of companies. A company like an Intel, a Microsoft, a company like an Apple, a company like a AbbVie, like all these different companies and corporations that may have done well. A company like CI, healthcare companies, companies that may have done really, really well on their earnings and done just really, really well on where they're projecting, future sales and production to be. A company like CAT, like these different companies that may benefit from the infrastructure bill whenever that is passed. Just there are a couple things you want to keep your eye on. Keep your eye on the sectors that are involved in infrastructure. Keep your eye on the sectors that are involved in microchips, and keep your eye on the sectors that are involved in leisure, right? Those will be interesting to see, because there's a lot of, I'll say, potential volatility around those sectors based on present and future events and legislation. So keep an eye on that to see how those sectors may react, and see if you can find a trade for yourself in some of those sectors. If you like this video, please don't hesitate to tap that like button. And if you'd like to receive more videos like this, please subscribe to our YouTube channel, Power of Pivots, where you can look forward to receiving not just content from me, but great content from Elisa as she shows you how she utilizes her Power of Pivot strategy to be able to find great pre-market, intraday, post-market, and also swing plays. Thank you so much for your time. Have a wonderful week of trading, and I'll see you soon.